Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money world and make it less blah. Today we are diving deep into a big report from a big bank, the Toronto Dominion Bank, and their Form 40F filing. Before we dive in, do you love getting the real story behind these super dry corporate reports? Then hit that subscribe button. And hey, we're building a super curious community over on our Discord server, linked below, so join us there. Alright, so we have the Toronto Dominion Bank, also known as TD, and this filing covers their year ending the 31st of October 2025. Think of this as their annual checkup with the US Securities and Exchange Commission, or SEC. Let's start with the numbers that really matter. They have a massive number of common shares outstanding, over 1.6 billion. That is a lot of ownership pieces out there. They also have several classes of preferred shares, which are like special types of shares with different rights. For example, Series 16 preferred shares have 14 million shares outstanding. These preferred shares are important because they can affect how much money is left for common shareholders. But this report tells us some of these are more like internal transactions for their funding structure and are eliminated on their main financial statements. First, a quick check on their reporting. They have indeed filed all required reports over the last year and have been keeping up with their filing duties for the past 90 days. So far so good, and for an important technical point, they submit their interactive data files electronically every time they are required to, so they are keeping up with the digital side of things. Now, they are not an emerging growth company. This means they are a more established player, which usually comes with more scrutiny and responsibility. Auditing their books is Ernst & Young LLP based in Toronto. They are the ones who check if the financial statements are accurate and fair. Companies like this really need to have clear rules for how everyone behaves. Their code of conduct and ethics applies to everyone from the top CEO down to every employee. They recently updated this code with some key changes. For example, now employees have to report not just criminal charges but also any bad news from regulators. They also clarified rules about gifts and entertainment and made it very clear they do not want any bribery or corruption. A nice touch is they expanded rules to prohibit recommending a security based on secret information. And they even updated dress code rules to say employees can't wear political statements that might make people think that is TDS view. They say no one at the very top got any special exceptions to these rules this year, which is a good sign. Now, this is an interesting part. Under a specific law, the bank has to tell us if they have done any business related to Iran or with people targeted by US sanctions. It looks like they found 3 situations. One was a personal account in Canada with a small initial deposit of 3,000 Canadian dollars. The person who owned this account was on a US Treasury list of banned individuals. The bank froze the account and reported it because the person was connected to a terrorist group listed in Canada. No other money moved in this account. Another situation involved a banking relationship with someone else on that same US Treasury list. This relationship included a credit card that was already closed and an inactive personal account in Canada. Again, the bank froze the account and reported it due to the individual's connection to a terrorist organization. No other transactions happened here either. The third situation was with someone flagged by the US Treasury for secondary sanctions because they were helping the Iranian government with money matters. This involved 2 personal accounts in Canada with very little activity. The bank ended this relationship. In all 3 cases, the bank states that the money earned by the bank from these accounts was very small and not important to their overall business. They also say they have no plans to do any more business with these individuals. Their common shares trade under the ticker symbol TD on the New York Stock Exchange. This filing includes their audited annual financial statements. That is the core of what we're here to decode. Let's look at the big picture from their balance sheet. Comparing the 31st of October 2025 to the 31st of October 2024, we see how their assets, liabilities, and equity changed. This is where we see how much cash they have, how much is owed to them, and what they owe to others. For instance, their total assets show how much the bank owns. Seeing how this number changes from year to year gives us a hint about whether they are growing, expanding, or shrinking. Now, for the income statement, this shows how much money they made and how much they spent. It's crucial to see if their revenues are growing faster than their expenses. If their revenue grew significantly but their net income stayed flat or decreased, it could mean their costs are out of control or they are facing tough competition. For example, we want to see if their interest income from loans is booming and if their provisions for credit losses, known as the money they set aside for bad loans, are under control. The notes accompanying the financial statements are like the footnotes to a story. They explain in detail what the numbers mean and any important accounting choices the bank made. While very technical, these notes often reveal crucial information about the bank's strategy, risks, and future prospects. Overall, the Toronto Dominion Bank appears to be a solid well. Established financial institution, their commitment to transparency indicated by their detailed reporting and updated ethics code is a positive sign. The disclosures regarding their engagement with sanctioned entities while concerning are handled with immediate corrective action, and reporting demonstrating a focus on compliance. We will keep watching their financial health closely to see how they navigate the evolving economic landscape. Alright, that is our breakdown of the Toronto Dominion Bank's latest filing. What is your take on these numbers and what they signal for the bank's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.